Hey everyone, Anthony Venuti here with InTouch Mortgage Solutions. It's Friday, Finance Fridays, and thank you again for tuning in. On this episode, I want to talk about annual mortgage statements, what you should do with them, what they're good for, and what you should consider now that you have it. Stay tuned, we're going to dive right in. Once again, we want to take the opportunity to thank all our continued viewers and supporters on our Instagram, YouTube, and our upcoming podcast regarding, financial literacy and expanding horizons when it comes to understanding mortgages and real estate and everything in between. So basically, now we're in middle of January, and mortgage statements are going to start rolling out. You're going to be getting them in the mail. Don't throw them out. You want to take a look at them. I mean, here's a big thing with annual mortgage statements. Obviously, for many people, they may be monitoring their mortgage status as the months go on. And maybe you were aware of your interest rates, how much money you're paying towards principal, how much money's gone to interest, what your amortization is. But I think the most important part is if you're planning to restructure, refinance, depending on when your mortgage comes up for maturity, you want to have that mortgage statement if you're planning to move lenders, because you may run into a situation where your broker or bank will ask you for your previous mortgage statement if you're deciding to leave. And they may say, hey, listen, you need that. You might have to pay a small fee to get it mailed out to you, especially if you don't have access to online banking, because that information is very important. And it can save you a couple bucks by just keeping it, scanning it, putting it into a folder, and keeping it handy. Also, if you're an investor and you have rental properties, it goes without saying that you need to keep those when you file your income taxes at in the next few months. So keep those mortgage statements, obviously, and annual mortgage statements. It's important. There's a lot of information out there, but more importantly, what it means and having a conversation about having a conversation and discussion about exactly what you should be doing. Now, as 2022 rolls out, obviously coming out of where we've been in the last 2 years, all your options may be dependent on where you've been. Has the last 2 years been good for you? Has it changed? Have you switched careers? How is your financial stability? Where are you financially in this journey? You've built equity in your home. What are the options? And this is something that we always have a conversation about. So now is also a good time, because along with the annual mortgage statement, you're going to be getting your credit card bills after the holidays. And maybe you're like many Canadians, maybe you spent a little bit too much. Maybe you're looking at your actual balance on your credit card saying, this is pretty high. I don't know how long it's going to take me to pay this off. And you're hemorrhaging money on higher interest rate debts as opposed to your mortgage. So taking that into consideration is very important, because higher rate credit cards are going to be interest only, or if you're paying in the minimum, it can take decades to pay that off, and none of that money goes towards principal, especially if you're continuing to use it. Not to mention, if you're sitting at the higher end of your balance, it's also impacting your credit. And for many Canadians, who may not be aware, if you own a home and you have equity built in because you've earned some equity over the last little while, as we've seen prices go up, you have the option to potentially restructure, borrow some of that equity to help pay off those debts, to avoid consumer proposals, any type of credit counseling, or potentially even bankruptcies. So taking a look at those options, looking at your financial situation, maybe looking at restructuring now that rates have gone up a little bit on the fixed side and are still relatively low on the variable side. And by that, I mean, by the rates going up and now being a little bit higher, the penalties to maybe get out of your mortgage might be significantly lower than you had previously thought. Maybe you looked at it a few months ago when rates were really low, but you said no because of the penalties. Now you may want to reconsider, because those rates have gone up and how penalties are calculated are a little bit different. So always finding out from your institution, talking to your mortgage broker about that will help you get a better understanding of if it makes more sense for you to restructure. Above and beyond the refinancing component of looking at the annual mortgage statement and your financial situation is looking at what to do going forward. And one important part is that tax season is around the corner. A lot of Canadians may want to top up their RSP, maybe increase their TFSA balances, or put more money into their TFSA account to help increase their investment portfolio. So amongst those things is you can also look at restructuring to top up, pulling out some money to top up those RSPs, TFSAs, but also speaking to your investment professional or investment advisor about, revisiting your portfolio, understanding if there's any changes, because markets have changed over the last little while. So maybe looking at your portfolio, your returns, and things like that may help you understand, because it is an annual thing. You'd be surprised how many times we talk with Canadians and we talk about their investments, or they're talking to us about their investment, and they have no idea what they're holding. They have no idea what it is, how they're performing. They're just setting it and forgetting it. now is a really good time to have a conversation about it with your investment advisor. Now is also a good time to talk to your lawyer if you have a will. Maybe you don't have a will. You know, top of the year is always important because things have changed. Everyone is looking to start the new year over and fresh. So having a will in place or revisiting your will, because maybe it's been some time since you have looked at it, is to see exactly what is in there and if anything has changed in your life. Maybe your family's growing. Maybe you need to put some more people into the will. Maybe you're looking to reduce some things. Always talking to your lawyer and professional lawyer, obviously, goes without saying. You need to look at that and sort of have a conversation with them to maybe revisit that. Now, obviously, we talked about RSPs, we talked about tax time, we talked about wills, we talked about restructuring. Now is a good time to also, as a Canadian, to set some goals in place. If you're planning to move in the near future and you want to look at the options to purchase a new home, obviously you want to speak to your mortgage professional, but it's important to understand that you need to have money put aside and you need a deposit. Now, for many Canadians, maybe they can reach out to friends, family, maybe they have some savings put aside. Maybe their money's in the markets, but they don't necessarily want to pull it out because maybe their return has been impacted. You don't know what happens. So you're always looking at options to put at least a hefty little bit of money down and aside if you're planning to move is going to be important, because as home prices have increased over the last little while, you do need to have a nice hefty deposit to make the seller look like your offer is serious. Now, as I said, what does that mean? It all depends on the exact amount of the home that you're purchasing, but the going rule of thumb when you speak with real estate professionals is generally 5%. You want at least 5% as a deposit if you're going to purchase a home. And if you don't have that and you find the home of your dreams, but you don't have the money, you might be running around frantically trying to find it. Take an opportunity, take a step back, reflect on your finances, reflect on your goals, objectives, put down some notes of where you want to be in 2022, what things you want to accomplish. And I always find that that's the best thing. So not only is the annual mortgage statement a piece of paper that talks about your mortgage, but it can signify and basically mean an opportunity right now for you to take a few steps back, look at your finances, will, investment portfolio, figure out your tax situation. If you're self-employed, maybe you need to pay your income taxes this year. You're paying interest on those because maybe you didn't pay it off in full. Now's a good opportunity with equity up, interest rates still relatively low and historically in a good position. You may want to consider some of these options. I hope you all found this video helpful. It's Friday, Finance Fridays, and we want to wish everyone a great Friday and even better weekend ahead. Thank you for tuning in, and until next week, take care.